Oof, guys, the markets did not do well at all today. It was one of those days we had all the indexes in the red. The VIX went up 7.5%. We had the metals, I believe, up as well, and oil did pretty well. It was in the green earlier today, at least last I checked. So we're going to break down the indexes in this video, stocks I'm looking at, my thoughts. But before we do that, hit the like button. Feel free to subscribe. It's free. And don't forget to get up to 16 stocks for Moomoo, each up to $2,000. Use that link down below. Open up your account and fund it with at least $100. You get 5 stocks right off the bat, and fund it with at least $1,000. You get 10 more stocks, totaling 15 stocks. And guys, fund it with at least $5,000 on top of those 15 stocks for a limited time. The clock's ticking. You also get a free share of either Google stock or Tesla stock. So get on it. Use that link down below. And now, guys, cheers. Let's dive right into the video. So it's currently 5:15. So the markets have been closed right now for about an hour, hour and a half, and we had all the indexes, like I said in the intro, in the red today, and not just a little bit, 0.25%, 0.3, 0.5%. No, we were down a lot more than that. The NASDAQ led the losses, down 1.7%. We had the Russell down over 1%. The S&P went down 1.2%, and we had the Dow Jones down 0.8, almost 0.9%. Rough day, guys, as the VIX, like I said in the intro, went up almost 8% on the day. So you guys can see SPY downtrended all day. We opened up at around, let's see, 448. We downtrended to about 442. That was a down move of, let's see, around 1.2-ish%. So we downtrended all day without a single breakout, in between, right? You guys can see that on SPY, and Triple Q was a lot of the same, right? You guys can see we opened up at around 376, got all the way down to 369.85 at the low of the day. That was a drop of 1.7%. And in the pre-market, we were at 378. So from 378 down to 369, that was a down move of 2.3%. Pretty big drop there for Triple Q. So we sold off all across the board, with a lot of that being tech. We had a lot of the tech names go down today. You name it. Nvidia down 3.7%. Meta down 3.7%. Amazon down 3% on the day. You name it. Microsoft down 2.5%. So when it's one of those days when tech's getting hit like that, especially the biggest companies in the world, you bet you know what, we're going to be red, and it's going to be ugly, at least for that day, which today was that day, right? It was just a rough day across the board. And even though the VIX went up 7.5% today, guys, it is still pretty low historically speaking. If I pull it up and show you, the VIX went up 7.5%. Yeah, about, let's see, it got up to about 1380. It actually hit over 14 earlier in the day, or actually more towards the end of the day. But either way, it went up a good chunk from yesterday, but overall, we're still very beaten down on the VIX. As you guys could imagine, if I pull this up and show you, make my face a little bit smaller, you guys can see VIX downtrended all year pretty much, and you can barely even see the spike we saw today on this 4-hour chart, and you definitely can't see it on the 3-year chart, which you guys can see here. We're at a fresh low, and on the max chart as well, you can see this is not looking too pretty, guys. Not looking too pretty at all. So the VIX is, interesting. It's at an interesting spot historically speaking right now, to say the least, guys. And let's pull up oil and see what that's looking like on the 4-hour time frame. Let's see here, guys. Yeah, it's up. It went up over $1 on the day, $1 a barrel, up 1.1%. And to be honest, guys, we are a little bit overbought in the short term, I'd say. I'd argue here on crude oil. Oops, let me make my face a little bit bigger. There we go, guys. We are a bit extended above the moving averages. Yes, we did have a big day today, or a big past couple of days, which is awesome, but this could be one, or not one like it's a stock, but this could see a pullback, maybe down to the mid 80s, maybe high 80s. I'm just speculating here, which could put it anywhere by the 50 SMA, $85 to $88. That'd be a spot where I'd be like, all right, that'd be a healthy pullback spot for oil, but we're not seeing any signs of that quite yet. So it could go either way at this point. This momentum could arguably continue towards 100 a barrel in the short term. If I pull the yearly chart up, you can see, or at least 93, 94 in the short term. Maybe we do go up a little bit more, then we see a bit of a sell-off. But either way, we're overbought. Keep it in mind, and we'll see something similar eventually to what we saw from the beginning of August to about the end of August. You can see there was a 3-week stretch where oil pulled back from 85 a barrel to about $77 a barrel. That's probably what we're going to get. Not exactly, obviously, but something similar to that is kind of what I'm looking for before the next leg up, which I think oil could get to over $100 a barrel at some point very soon here. Totally possible. So yeah, guys, it was just one of those days today where all the indexes were red, oil was up, the metals were up, the VIX was up. It was just one of those days. SQQQ did very well, which, when's the last time we talked about that? I mean, geez, guys, SQQQ has not done anything over the past couple of months. But today it went up 5%. If you guys, don't know what this is simply a 3x leveraged ETF, essentially, that goes the opposite of the QQQ, the NASDAQ, in other words, right? So let's say QQQ goes down 3%, SQQQ is going to go up around 9%. So it's an inverse leveraged ETF, attached to QQQ, which again is the NASDAQ. So this is one worth watching if we get more red, which who knows if we will. But if we do, this is one worth watching for trading purposes, not as an investment. I'm not a fan of holding leveraged ETFs more than a day or two, to be honest, let alone investments. I mean, geez, they're not investments, guys. They're trading vehicles for the short term. But either way, I'm going to be watching it. We'll see how it plays out if we do get more downside in the NASDAQ, in tech in general. We'll see how that plays out. And by the way, we're now halfway through September, so you guys have heard of the September effect, right? Where I think September, it might not be the worst year in the stock or a month in the stock market historically over the last 100 years, but it's one of the worst. So let's see how much we've gone up or down this month so far, roughly here. So it looks like we started off on the month on SPY or first SPY at around $452-ish per share on SPY. So that's where it was at on the 1st of September. We actually got up to about 453, almost 454. So we're down from that point about $10. So SPY on the month is down 2.2%, guys. So right now, even though we're only halfway through, we are down on the month, and September is not looking too pretty right now, at least as of now. For all we know, we could get a crazy rally second half, but right now, again, we're down 2.2%, and QQQ is probably down even more, just the way it is, guys. This thing's down. Let's see. We started off the month at we peaked at 381 that day. Now we're at 370, so we are down about 2.8% from that recent high. Okay, or from the high from the beginning of this month. So not too crazy, but looks like September, it being a weak month, history is repeating itself, guys. So what do you think? Let me know your thoughts in the comments. Hit that like button, and don't forget to get up to 16 stocks for Moomoo, guys. Check out all the details down below. Once you fund your account with your initial $100, you get 5 stocks right off the bat, and fund it with at least $1,000, you get 10 more stocks, totaling 15 stocks. And listen to this, guys. Fund it with at least $5,000 on top of those 15 stocks for a limited time. You also get a free share of either Google stock or Tesla stock, which makes this promo a no-brainer. So get on it, guys. Use that link down below. And before you click off, let's take a look at some stocks today that moved up or down. Well, most of them were moving down, guys. So before we click off, let's take a look at some of these ticker symbols, right? So today, again, was a red day, like you guys obviously saw. So tech took a beating. Let's start there. We had NVIDIA go down a whopping, 4% almost. Now we're back under both the 50 and the 180 SMAs on the 4-hour chart. Keep that in mind. Now NVIDIA is down about almost $100 from the highs after earnings. So we're down almost 16%. Crazy enough, we're down that much, and the uptrend is still very obviously intact, right? It's still holding very nicely right now. So NVIDIA, man, it is it's doing very well still, but it's down almost $80. And the crazy thing is, this could be gearing up for another rally for all we know, guys. I mean, geez, there's still so much hype around AI, NVIDIA, the future, right? So keep your eyes on that. That's interesting. It got beaten down today. Apple, let's see how that did. Down to $175 today, guys. Down 0.4%. This has been getting beaten down. You guys know that. It's now down about $23 from the recent highs, or about 11-12%. So officially in correction territory. So Apple's down, a good chunk over the past 2 months. We have, let's see, Amazon down 3% over the, or rather on the day. And this is actually interesting, guys. Amazon's still very bullish on the charts. We're above the moving averages. We're clearly above the wedge still. Now we're just pulling back in the overall breakout. Do you guys see that? We got a bit stretched as we got to 146. Now we're pulling back a bit, 140. We're right by the 50, 180 SMAs. This could be a spot where buyers come in to push this thing higher. So I don't want to get too deep, too far into these stocks, guys. But those are a couple here that I'm looking at. Make sure to subscribe for more. We're going to break down a lot more stocks, so do that. And let me know in the comments if you want me to cover any particular ticker symbols. Follow me on Twitter as well, at Stocks Talk Stocks. Make sure to do that. I'm getting way more active on there. And yeah, that's it, guys. Cheers. I appreciate you all for tuning in as always. I'll catch you in the next video.